All right, guys, welcome to the Buff Show.
Welcome.
Hi.
We got a Q1 market update rolling your way. So this is going to be a little bit different. We're going over our typical monthly market update, but we have more data points to pull in, especially for some of these areas that we service a lot, like Morgan County, Weber County, Ogden Valley, things like that. So we're going to jump into it. We got some exciting news for you, and the sky's falling, right, Austin?
Yeah. The sky is falling. We were trying to figure out how to make this interesting to click on, right?
Yeah, some
Just say
clickbait.
sky is falling.
Yeah.
Yeah.
I even got my hair cut for this.
He did.
Shout out to
looks,
Ava.
It looks really good.
Right.
Really good.
Yeah.
And beard trimmed.
Beard trimmed and everything.
You had
Yeah.
Beard
some,
oil or no?
No, I always put oil on.
Always?
You gotta have
Okay.
oil on
I
it,
shaved
I
my
wouldn't
beard off.
Well, I had
If you could even
Ava-
call it a beard. It was more scruff.
Yeah.
I had her wax me out.
Really?
On the thing, yeah.
Dude, why don't you do that for the podcast?
Well-
Show me how long those are.
Well, I was gonna do it,
Look
but
right
then
into
we
the
were supposed.
camera.
I thought we were
Oh
doing
my
it yesterday, but
gosh.
we're doing it today. But she had it waxed out to here, and
Twisted up.
yeah, but
that-
Called
that-
Mr. Monopoly.
yeah.
Yeah.
Holy cow. That's a good word for
Yeah,
beard.
that's
Mr. Monopoly. I can go with
That
that.
should be your new Instagram tag.
Because he's bald too, isn't he?
And he's got a squirrely mustache.
Yeah.
Well, I don't know about squirrely. Yeah, that's kind of a derogatory term, isn't it?
A
Say
little bit.
Oh,
Okay.
man.
Okay.
All right.
Let's get for real.
So we're going to dive into this Q1 market update. So the first thing we want to talk about is prevailing interest rate. What's going on with the rates right now? Have you guys heard? I printed off some stuff from some lenders that shoot me emails all the time.
I feel like I'm dating the feds.
Why
They're
is
just
that?
leading me on one day and then just
Oh.
pulling the rug out on me the next
Oh,
day.
Yeah, yeah.
And it's hard because then I tell everybody about my interesting dating life and then it changes.
Mm-hmm.
Yeah.
Right? So the feds were talking about, hey, if inflation's curved, we're going to do 3 rate drops by the end of the year. They had this big plan. And then they just came out and said, JK, nothing's happening.
Right.
I think when they said that, we just assumed inflation would get curbed and settled
Mhm.
down. No one thought of the situation where, well, what if it doesn't? We just heard the good news and clung to it.
Yeah.
Well, and I think that's the biggest thing is they laid out a plan like they were ready to do
Yeah.
it.
Yeah.
But that small little indicator at the start didn't happen. Our inflation wasn't curbed enough for them
Yeah.
to do rate drops.
Right.
Since then, job growth reports, inflation, GDP, that's all, updated reports have come out and they don't feel comfortable doing anything.
So the end of 2023, the Fed said, we're going to drop the rates, 3 or 4 times in 2024. We clung on to that,
Mhm.
thinking, oh man, this year's going to be crazy. We're going to have new interest rates, lower interest
Yeah.
rates. And here we are, middle April.
Yeah.
And
As a matter of fact, they went up a little.
right.
Yeah. They went
Yeah.
up.
The news of them not going down
Yeah.
made them go up.
But
So-
what's interesting, we'll go through it, is all the other statistics still point to, hey, we know interest rates are going up, but this is a strong market considering high interest rates.
Yeah.
It's pretty interesting.
It is super interesting. So right now we're sitting right around 7 to 7.5% interest rate on a primary residence. So
Dang.
they're up there.
Yeah.
They're kind of the highest they've been in a while.
Yeah.
And it's not super. I mean, there's not a lot of excitement there with interest rates right now.
No,
They just are.
They basically pushed back everything they were saying supposed to happen like end of spring, like early summer, June. And now they're saying, well, push that back like another 6 months.
Right. So let's jump into, normally we go over like our monthly indicators here, but today we're going to switch this up a little bit because we have new numbers. We have the economic report from the governor, which we just kind of wanted to touch on briefly, and then also go over these quarterly numbers that we've gotten back for some counties and the state in general. Because I love when we can compare a full quarter to like a quarter in the past. It's like it's really like clear what's going on with the market. So, do you guys want to pitch in on the economic report? Anything that stuck out to you there when we watched that video?
What was the words that they used? A
So,
unsettled norm.
yep,
So I like that because it goes back to that old adage, and how I interpreted that is, it is what it is now, right? We've seen the craziness. We're coming out of the craziness. It's normal because this is where we're at. Like this
Right.
is what we're in. However, it's not
it's unsettled.
historically the same.
Right.
Yeah. So everybody's not sure what's going to happen next. So like this is normal. It really is. This is how we're going to have to operate.
This
in
is
my
our new
opinion.
normal.
Yeah.
Yeah.
We just have to accept it and continue to move forward
Yeah.
because those who hesitate are lost.
Right. So in 2023, when they reviewed everything for the economic report for Utah, the words that they described 2023 was remarkable resiliency.
Mm.
Just that, like we had a lot of challenges in 2023 with rates, inflation, and there was a lot of like predictions that we were gonna like go down or be in a worse market, but we actually came out in good shape.
Yeah. I remember, I don't know, this time last year when they were saying by the end of 2023, it's likely we'll be in a recession. You guys remember that?
Yeah.
There are a lot of
Yeah.
talk about
Do
recession.
you have how many? That's the hard part. You don't want to dip into stuff. I've heard soft landing, shallow recession.
Yeah,
this and that.
yeah,
Like I don't even
yeah.
know what it means anymore.
Yeah.
Right.
You know,
But the point
Yeah.
is we didn't even have a shallow recession. We had growth in Utah throughout all of those negative variables.
Right. I would say house prices, we did see some kickback there in some areas. Like overall, we saw house prices come down, but it was more 2022, 2023.
Mhm.
Yeah.
And
They've been
then
on the rise.
they-
Last couple quarters, they've
Yeah.
been on the rise.
Yeah. And we're going to get into that. And then 2024, they're saying it's unsettled normalcy. We just got continued growth. Our labor market is outpacing the US. And there's a lot of like strong economic factors.
Why do you think
for Utah.
Why do you think Utah is so resilient?
I think we have a strong labor force here
Mhm.
and tons of jobs.
Yep. Yeah. Yeah. So Salt Lake City is the number one job growth market in the nation. So with
It's
that,
crazy.
how could you not?
Yeah, and I think
Silicon
that's
Slopes.
all of that kicks up the want and desire to live here.
Right.
Because there is opportunity to
Yeah.
work. There is opportunity for business. There
And play. Like,
and play. You can
like
play it
yeah.
any way
It's
you
an
look.
attractive
Yeah.
state no matter what way you look at it.
We're just missing an ocean. That's all we
Yeah.
need. A little bit of beachfront property in Utah, you know.
I mean, we have the Great Salt Lake.
Yeah.
Yeah, it's salty.
Yeah, salty.
So
Oh man. Well, let's
Okay.
jump into the Q1 numbers for each county. So, and then we'll jump into the other one. So, we cover most of northern Utah. So, I'm going to start up with like Cache County. So, in Q1 of 2023, there were 223 closed sales. In Q1 of 2024, 236. So, positive 5.8% increase in closed sales from Q1 of 2023 to Q1 of 2024. And then Cache Valley's median sales price actually went up 1.1% from Q1 of last year to Q1 of this year. So more closed sales price went up.
Mhm.
and I want everyone to really watch as we get going through these counties when people are waiting for the prices to drop.
Right.
Look
Oh.
at the trend that you're going to see in all these counties,
Mhm.
right?
Yeah.
So next one we have Davis County. Q1 of 23, we had 850 closed sales. Q1 of 24, we had 793. So we actually went down on overall sales.
Mhm.
However, the median sales price went from 479,000 in Q1 of 23 to 505,000 of Q1 of 2024. So we went up a full 5%. Once again, when we're talking these percents and these numbers, that's a big jump. 5%.
Uh-huh.
Think about that. That's
5%
5,000
of 500,000.
Yep, 5,000 for every $100,000
Yeah.
more. So on a $500,000 house,
Yep.
you're getting an average of $25,000 more money.
Over
Right.
12 months.
Right.
And rates haven't even changed over those 12 months.
No.
Correct.
Yeah.
Okay, Morgan County. So we had 13 closed sales in Q1 of 2023. We have 38 closed sales in Q1 of 2024.
So Morgan is like an outlier because it's a small county and like I don't like looking at median numbers for Morgan because there's just not that much data points. Like I
Yeah.
prefer average, but these are median. So when you look at the price, it's going to be a little bit like I would prefer average and when it comes to Morgan, and we were talking about this before, Austin. Why do you think Morgan had
Yeah.
like 2 times more closings in
Yeah.
Morgan?
So let me get back to my economics and finance degree roots here. We'll go on.
Flex.
So there's a tiny sample size in Morgan, right? Last year they only sold 13 all of Q1. So if you just grow by a couple of sales, that's going to change that mark by a lot. So your variances go up and down, just because that sample size is so small. So It grew 192% in closed sales, going from 13 to 38.
That's crazy.
It is. And then as far as median sales price, so we went from 675,000 last year to 689,000 this year. So a 2% growth.
So, but we were talking, why did Morgan get 38 more?
Oh, right.
Yeah.
Yeah.
I personally, so we live in Morgan County, and honestly, what I think it is you have some townhomes getting done
Mhm.
quicker,
Yeah.
or you have a new development that just
Yeah.
started.
Yeah.
Those little things,
Yeah.
Influx.
Huge.
Yeah.
So the Rome development is I think at large to account for that huge increase, right? It's got townhomes, it's got single family homes. There's multiple builders there. Like it's a big growth opportunity for Mountain Green, which is in Morgan.
And remember, what we're not talking here too. These are home sales.
Right.
These aren't talking all your lots and lands and what people are building
Right.
as well.
Mhm.
So
Right.
keep that in mind.
Yeah. Weber County. So Weber County, definitely more transactions, as you'll see, as a county in whole. And this encompasses Ogden Valley, which I have a smaller breakdown of Ogden Valley after this. 761 sales in Q1 of 2023 to 756 in Q1 of 2024. So actually a negative 0.7% decrease in home sales. I mean, that's hardly anything. I'd say we're flatlining there.
Mhm.
But the median sales price went from 395 in Q1 of 2023 to 420 in Q1 of 2024, a positive 6.3% growth,
Mhm.
which is, I mean, other than Davis County, Weber County had one of the strongest increases in pricing
Yep.
in some of these counties. So,
Well, and they have a big enough
like data
sample
point.
pool, data
Mhm.
pool that's a solid number. Like you can really count on that number because it's not $1 million house
Right.
or something that's swinging that.
Yeah.
Mhm.
And then who wants to do the entire state?
I'll do. I'm
Yeah.
next in the
Okay.
rotation.
Okay.
All right. Q1 of 2023 for all of Utah was 8,778 homes. Q1 of 24, 8,860 homes. So it grew by almost 1%, so 0.9%. Now here's another one. We're talking about that big sample pool for that median sales price. Q1 of 23, 470,000. Q1 of 2024, 490,000. So we went up 4.3% on our median
Mhm.
household
Yep.
Sales price.
sales
That's-
price. Yep.
That is crazy because it's funny. I talk to people and like even just yesterday, somebody's like, "How's the market doing?"
Mhm.
I'm like, pretty good actually. Like it's and we were talking about this earlier. It depends on who you're talking to because buyers, like good means it's going down, right?
Right.
And sellers, good means it's going up. But when we say good, it's
We're moving.
It's
Fairly
moving.
healthy.
It's moving
Yeah,
when we
it's
say
moving,
good.
and prices are going up.
Mhm.
And so everybody that's still waiting for prices to come down, like I don't foresee that happening this spring or summer. And we'll get into our predictions later. But Q1, like comparing Q1 of 2024 to Q1 of last year, we have
Yeah.
solid signs of growth. I mean, a 4.3% and
Right.
with the interest rates that we have, I mean, that's above flatlining in my opinion,
For sure.
right?
For sure.
So
Well,
That's material.
and
Yeah.
just in general, a slow growth in my mind is healthy. You
Mhm.
want a slow growth
Yeah.
of sales. You want a slow growth of price.
Yep. Real estate
We
always
don't want the
appreciates over
rapidness,
time.
right?
yeah.
So-
Yeah. My assumption is, remember last year this time, those high interest rates people were still a little bit shocked, right? It was still new.
hmm
It's not new anymore. Like we're just used to it. So
Yeah.
I think that's why some people are like, okay, nothing's changed, but we just need to move. Like,
Yeah.
let's just do it.
Everybody's sitting on the fence.
Yeah.
Like the fence is getting so
Crowded.
Congested.
crowded
yeah.
up top. People are just starting to jump off. They're like, screw this.
Yeah.
Like, yeah. And then you see some people jump off and they're like, oh, it's actually not that bad. You know?
Yeah.
Yeah, it's funny. And it's interesting too. The more deals that I close, for example, I just had a friend, he just closed on a house and his mortgage payment's $5,000 a month. And I'm like, holy cow, that's a lot of money.
Mhm.
But like the more deals that I close in my head, I'm like, actually, like it's not that, like he has some rentals and it's helping like pay for that as well. But like even in my brain, like my brain becomes more accustomed to, oh, in the past, this was a high mortgage amount, but
Yeah.
it keeps getting bumped up, right?
Yeah.
So
Yeah. I think a couple of years ago it was like 2,000 was
Was a
kind of
lot.
like an average. It was a
Yeah.
lot became kind of the average.
Now it's
And now
3
it's
to
like
4, 3 to 5,000. you know?
2,000 would be
Yeah.
great.
Yeah,
Yeah.
that's great.
Well, and I honestly think that helped. And maybe we're being a little premature with this. I think an older generation, take that however you want.
Boomers.
Yeah, an older generation, it scares more than us and our younger generation
Yes.
and below that because they one have never seen it, and two,
Yeah.
they don't have to because they're settled in. They're not making
Right.
a lot of moves for the most part, so they're almost, in my opinion, cramping and scaring this younger generation.
Yeah.
Oh,
But
they
it's
are
gotta
for
get
sure.
going.
Yep.
They
Right.
for sure. It's like my grandpa. He has since passed, but he would always tell me, "It's like Peyton. You want to know the secret to life? 83-33." I'm like 83-33. He's like, "Yeah, every month I save 83-33." And so his philosophy,
Dollars
a month.
$83.
Yeah, and 33 cents.
Okay.
He would save that. And
Wow.
he when he passed, he had like a solid, like that was a solid plan for him. It was
Wow.
83-33. But you look at the age that he grew up in, and that was like a
Right.
significant amount.
Yeah.
83-33 is like we're talking, you got to be $833
Yeah,
like
yeah.
a month that you're
Yeah,
saving
yeah.
now,
Yeah.
like 10x it.
I'm sure
So-
at a point in his life, if you had anything left over at the end of the month,
Right.
it was amazing.
Well, and we can get into that argument as well later. Like I talk with my dad all the time. I'm like, man, you had it easy when you were growing up. Like your first house, you were like 14 grand, your truck, like a couple grand for that. Gas was under $1,
Yeah.
food was cheap. You're making $9 an hour. And I'm like, when I got home from my mission, I was making $11 an hour. My house was 180,000. My
Right.
car, it just feels like things got less affordable. But I see that happen a lot when people are trying to buy a house or make some upgrades, and they talk to some of the older generation, and they're like, "You're doing what?"
Mhm.
And they'll scare them off because their mind's still they're 10,
Yeah.
20 years ago. And I suffer from this too
Oh yeah,
with rental properties. I'm like, it's got to do the 1% rule. I need 1%
Right.
of the
Which
purchase price.
doesn't really exist.
And that doesn't exist anymore.
Yeah.
So you have to change your
Yeah.
times change, and you have to change along with it.
Kind of a rabbit hole, but still something I laugh at. Every now and then you'll get that older generation say, "No, this house isn't worth 500." It's like, well, 20 years ago, no, it was not
Yeah.
worth 500. But what are you basing that off of in 2024?
Yeah.
I get it on a listing I have right now.
Yeah.
I have some younger kids going, "Oh man, that's a night like, oh, I wish I could afford it," or "We're gonna look into it." And then I
Sure.
have a grandpa or a grandma call me
Yeah.
and tell me that I've got a crack house and
Yeah.
they wouldn't ever let this, that, blah blah blah. Oh, it's funny.
Until they go to sell their property.
Yeah, and
they're
then they want 10 million for it.
Yeah.
So
Okay.
let's jump into
What do you want?
We love our boomers, by the way.
Yeah.
We love you guys. You're probably not watching this, but
So let's do the residential comparison for Morgan. Ben and Austin, you guys live in Morgan, so I'll let you kind of run with this. Where I went back 4 years on this, so we can go back to 2021 and compare Q1 of 2021, 2022, 2023, and 2024, and just see what it has done over the past 4 years. Do you want to cover that?
I'm going to take over the single family and then, so single families in Morgan from 21, 22, 23, and 24. And this is what we're talking about, how Morgan, anytime very little happens, it makes huge chart movements, right? So in 2021, that was like at the peak of the craze, right? In quarter one, we had 11 single family houses sold. In 2022, still kind of in the craze, but coming down, there was 24 homes sold. So there's no rhyme or reason. Then 23 back to 11. Now 24 back to 22.
Yeah, it's weird.
So I mean, we from 23 to 24, we've had 100% increase
Mm-hmm.
in Q1 of homes sold. So single family homes sold,
Mhm.
Yeah.
Mhm.
not counting townhouses, twins, and stuff like that.
Well, and tell us the price change, because people would think this is like as interest rates have climbed. So let's
Right,
talk
yeah.
about the average
So-
sold price.
So you're 21, you're 764,000. 22, we dropped 722,000. 23, we climbed back up to 796,000. And then from 23 to 24, because I think we're in that unsettled norm, people are jumping off the fence. We went from 796,000 to 943,000 average price of homes sold. So
Easy.
And
Huge jump.
that's what 22 sells in there too.
mhm. So yeah, a little bit bigger. I mean, it's still a small rate, but a little bit bigger.
And
Test pool.
you know what's the biggest thing that's happened in Morgan that I think we should talk about too, that we're seeing, is between 2022 and 2024, like Wasatch Peaks has exploded up there. And you know how many people from Wasatch Peaks I've seen buy homes while they're getting
Waiting.
ready to
Mhm.
build their house up there.
Oh, yeah.
And
It's true.
I've had listings that I've personally sold where they just come in cash,
Mhm.
buy it. And so I think that additional demand on Morgan and those buyers have helped push values
sure.
up
Yep.
there as well.
Well, and then just Morgan's overall natural demand, even without Wasatch Peaks,
Right.
everybody wants to get up there
Yeah.
because down below is getting more and more crowded.
Yeah.
Right.
You know,
What's funny is last year, I mean, everyone was saying this is a horrible time to buy. Horrible time to buy. If you had bought in Morgan County last year, like we just said, your house has already appreciated 18%. Try finding that in the stock market. Try finding that in any other, I shouldn't say any other, but most other asset classes. Like, and it's just funny. It's ironic that people said it's a horrible time to buy. And now you have an 18% appreciation
Yeah, that's crazy.
in 1 year. We'll skip the rest of these, like twin homes and mobile recreation, but going something notable, going to townhomes sold. So again, we mentioned the Rome development. They built a lot of townhomes recently. They're nightly rental approved. They're by Snow Basin. They're very attractive. So the number of sold townhomes from last year to this year, Q1, rose 1,400% because we sold one last year and we sold 15 just in Q1.
well, and it's showing average town home sold is 111.
Yeah.
15.
So every
Right.
year we usually
Yeah.
sell about one.
This is just the first quarter.
Yep.
So they sold 15 in 2024 in the first quarter.
Yeah,
Crazy.
it is crazy.
All
But
those
that's-
new builds got done around that same time.
Well, and that's interesting too, because those are all adding into, I mean, I guess those aren't into the single family sold price. So,
Right.
Yeah. That's how we get our 38 total sales in Morgan's townhomes,
right.
single family.
Right.
So almost as many townhomes sold as
Yeah.
single family homes.
Yeah,
That's
that is
true.
crazy.
And I think, and personally, I think that's because they're still in an affordability range.
Uh-huh.
That people can't afford.
Yeah.
Now the Rome ones are a little more unaffordable, but they make a little more sense because they're
Right.
nightly rental, in
Yeah.
a little bit better location. But yeah, like the ones we have Tractor Supply. I mean, as fast as they come up,
They're gone.
people are getting into them because
Yeah.
they've done a good job at having a nice area and they're affordable.
And I feel like most of those haven't even hit the market when they've sold a fair amount.
Oh
I mean,
yeah,
there's-
a lot of them
they're just off
They say,
market.
"Hey, we're not selling them yet. Just wait," and then they hit the market and go.
Yeah. Yeah.
And they're not done. That's a lot of reason why they're not selling. But the second they're ready to be sold, I mean, get in line. I've tried
Yeah.
to buy some, and
Yeah.
I fall behind or I don't pay attention, and they're gone the next day.
Sure.
Yeah. Okay. Well, let's jump over. Anything else on Morgan you guys want to throw in there? I think we,
I think Morgan's an anomaly. I
It
think
is.
what drives Morgan mostly, we're not a resort town. I think we
Yeah.
are.
Yeah.
it's
Yeah.
it's looking like it's headed that way.
yeah.
Well, and with growth, but I call it a hub town. It's a good small hometown that you can get to any lake you want, any ski
Yeah.
resort you want,
yeah.
and it's safe
Within an
Yeah.
hour.
Yeah.
And I don't think it's anything other than that. Than Morgan's core value is what is drawing people in.
Yeah.
Mhm.
Yeah.
The-
Morgan's awesome. And Ogden Valley has a little bit different. Like there's definitely more recreational activities central to
Yeah.
Ogden Valley. Like
Yeah.
like Ogden Valley, when we say that, we're talking Eden, Huntsville, Liberty. There's more trails, systems, and everything connecting. And I would say, like, if we compare Morgan, I would say probably 90% of Morgan is primary homeowners.
Yes. And
Maybe,
then,
and then some second homes. Not there's probably not even too many Airbnbs and rentals in Morgan. There's
Yeah.
some, but not much. But then when you go into Ogden Valley, you're probably 60%
vacation.
primary homeowners.
Oh, okay.
And then like 40% vacation homes.
That's
and
a lot though.
I could be off on that. I mean, it might even be pushing 50-50.
And I would
Um,
almost say 50-50 because your nicer homes aren't being rented. Those are your primaries. Not all of them, I should
and
say.
a lot of them are second
Yeah.
homes.
And
Yeah.
the
Yeah.
majority,
Second
because you have such a high density in your lodges and stuff are rental or
Yeah.
vacation or
Yeah.
Airbnb.
And there is a lot more development going in. Like you have the bridges, like all the Moose Hollow, Wolf Lodge, townhomes. Like those are all like vacation rentals or second homes. There's some people that live there full time, but so there are a lot more like second home, vacation home options in Ogden Valley, which is interesting because they're two valleys but very close to each other.
Yeah.
You could spit over
But,
the hill.
yeah.
I think what the difference is Ogden Valley is a rec and outdoor, and
Mhm.
they have so many more public amenities.
Yeah.
And so it just makes it more viable.
Well, everything's like instead of Morgan, you're 30 minutes to an hour away from different
Mhm.
places. In Ogden Valley, you're 15 minutes away.
Yeah.
You know?
Right.
to
Or
Powder
ski
Mountain.
lift.
Either
Or-
15 minutes away to everything, or
Yeah.
some of the stuff it's in your backyard.
Right.
Yeah.
You ride your bike from your
Yeah.
house, or
Yeah.
you walk to the
Ski
lake.
in, ski out
Yeah,
properties.
ski and ski out.
Yeah.
all of it.
Yeah. It's crazy. So let's jump into the Q1 update for Ogden Valley. And this is interesting. So just looking at, I'm going to go over days on market first, and then single family homes sold, and then single family average sold price. So the days on market in 2021 average was 53, and then it went up to 66 in 2022. In 2023 it went up to 95. In 2024 it's up to 114. So
Wow.
That's insane.
our days on market, like it's getting a lot longer. Homes are sitting a
Yeah.
lot longer, which is interesting. But the units sold, so single family homes sold in 2021, you had 30, in 2022, 27, in 2023, 21, all pretty similar. In 2024, it's down to 18. So not a lot of like sales within Ogden Valley in
Q1.
Q1.
Real quick, going back to the days on market, just to give you guys a frame of reference, Utah's average, I think, is like 50, 55 or something like that. So 114, like that.
It's
I would
high.
guess that's going to be the highest days on market in the whole state, maybe.
No,
20
there's
it's 61 days as of in
As-
March.
in
The
March.
state, the whole state of
The
Utah,
whole state of
61.
so
Utah.
we're
It's
almost
average days.
we're almost double.
double
Yeah.
the state's average.
But-
Wow.
Yeah, but let's look at the prices. So average sold price for a single family home in Ogden Valley in 2021, $979. That jumped up to $1 million or 1.17 in 2022. That was a 20% jump. In 2023, that jumped up to 1.268,
Crazy.
an 8.35% jump. In 2024, that jumped up to 1.467, almost 1.5 million. So we're talking almost double digit increases
Yeah.
every quarter. I mean, 23, it was only 8%.
So
But that's,
if you're patient, then you'll get a good payout. But you
Yeah.
got to be patient.
Yeah.
I
Because
mean,
that average sales price, that's triple the state of Utah. State of Utah is like 550.
no, state of Utah year to date right now is 623,000.
Average,
Average,
not
yeah.
median. Median would be like 550, I believe.
We're doing average.
is this average? Yeah,
Yeah.
these are averages. Yeah.
Okay.
So
Pay attention, Austin.
Way to change the stat I was referring to,
But it, yeah,
but double
Cra-
or triple the price. Let's
Yep.
say that. We'll agree there.
crazy numbers to see that the price has not changed that much.
Let me ask you this: what? Because you live there.
Yeah.
I live in Morgan. I'm still shiz kickers. Cowboy hick.
Yeah.
Like, is the dynamic changing from
So-
when you've been there? Like, has
Yeah, the biggest things that have changed in the valley is there's been a handful of developments that are like large, and these are more land developments, but I've been surprised at how they've flown off the shelves. Like you had Legacy Mountain, and all the lots were like $1 million plus, and I'm like, I don't know if they're going to get that, and they got
But
it,
it did.
and a lot of them sold. And then you have Osprey Ranches,
Mhm.
and they got, they burned through. Legacy Mountain, I think they're over half sold. Osprey, they're probably 2/3 sold of the phase 1, and they have a phase 2 coming. So I'm just amazed at how many of these larger estate lots that are selling. And then we've just seen home prices. Like I remember when homes would rarely, like they were all between $1 million and $2 million. And now it's not common to see homes in that $2 to $5 million price
Mm.
range in the valley.
not uncommon?
Not uncommon.
Not
Yeah.
uncommon,
yeah.
So we're seeing like prices have just
Yeah.
creeped up quickly. Like when we look at these stats, like we've seen it jump up like that. And then you have the recent changes with Powder Mountain, Reed Hastings bought into it, new ownership. They're changing it up. There's
Partially
a lot of
private, right?
Yeah, partially private. They pulled all their inventory off market. They're going about it a different way, and I think that's going to create some more excitement and demand and help bring up the valley as well.
Mhm.
You have Nordic that's pushing for an expansion and development project over
are
there.
they?
Yeah. Their lift burned down this winter, or not their lift, the lodge. So I anticipate some big moves from them. And then you have some bigger developments going in. You have the bridges that has been on in progress for a while. They had to stop that probably been 2 years ago due to water shortages, but now they have water and it's moving right along. There's a lot of changes. There's a lot of talk of some new commercial projects going in the valley, a new market.
What do you guys need? I feel like it's purely residential almost.
Yeah. I mean, and the valley's up in arms about it. Like it's hard for that growth to happen, right? There's growing pains along with it. So there's a lot of changes. And then on top of all of this, Ogden Valley so we've always been a part of, so Huntsville's incorporated. They have their own township, but Eden and Liberty are unincorporated. So we are ruled by Weber County. And there's a big push right now to incorporate Eden and Liberty. So they would be their own town. And that would change things. And a lot of the community wants that because they just feel like Weber County hasn't had
their best interest
at mind.
Yeah.
And so if you look at Morgan is like their own little valley, and they're incorporated. They're just like their own thing. And so
it's kind of
everybody that makes the rules in Morgan lives in Morgan, and
Right.
it's just easier. When if you're in the valley, it just feels like you have people in other areas that don't understand the valley dynamics, and they're making rules with the zoning and approving things and different things like that, but they don't necessarily live there,
Right.
even though some of them do, right? And so there's a big push for that. So there's going to be a lot of changes in the valley, and there's a ton of people coming in from outside looking at Eden. They're comparing it to Park City. Like you have all the ski resorts, you have the reservoir, you have all the trails, but there's not the amenities. So what the valley lacks is like the restaurants and the grocery stores
The
and
nightlife.
the nightlife. And we don't have that. But like fast forward 10 years, and I think a lot of that stuff is coming. It's in the works. And I don't know if there's any way to stop that from coming, right?
Yeah.
And
that's the age-old small town valley fight.
Anti-development. Yep.
Yeah.
And I get it both ways.
Yeah, and Morgan's going through that right now too, right? It's always hard for the growth. And so I think there's still a lot of change and growth for the valley. I mean, when you compare us to like Park City, we're still cheaper and more affordable than Park City. And it's kind of the valley phrase, like more park, less city. And right now it's like that. We don't have a stoplight. Like there's not a lot of restaurants open at night.
You got a grocery store.
We have a grocery store, 2 gas
I
stations.
mean, Morgan's even got coming up. Elise is coming in Morgan, and we have Ridley's.
That's
so
true. And you have a McDonald's.
We have stoplights.
We got it. So we're basically Park City.
Yeah, and a hotel.
And a hotel.
Yeah.
Yeah. So I mean both valleys, and then you look at Morgan, you have Wasatch Peaks and all this. So between Wasatch Peaks and Powder Mountain and like Snow Basin, like they announced a Club Med hotel like 2 years ago, and then they pulled that back. But as all these resorts grow, like it's just inevitable that you're going to see more growth in these valleys as people want to be closer to the recreation and just all the things there is to do there. So
something interesting I will say about Ogden Valley is of all of our out-of-state clients that I've worked with, all but one have been targeting Ogden Valley.
Really?
Yep. I've never had, well, again, one person that wasn't interested in that. So big recreation, big second home.
I love it there. Like I've lived in Morgan
gorgeous.
and Ogden Valley, and it's the reasons I fell in love with Ogden Valley is I can hop on my dirt bike or mountain bike and be on a trail in minutes. you know? And it's just awesome. And I've spent out like so much time on trails, and I have yet to like ride them all. Like there's a lot of trails and areas that I still have not uncovered in the valley, which is crazy.
That's cool.
So, okay, we are going to wrap this up quickly with just some of these final monthly indicators that we kind of go over. I just kind of wanted to go over the March, like what they what they said for March of 2024. So it says U.S. existing home sales improved for the second month in a row, jumping to 9.5% to a seasonally adjusted annual rate of 4.38 million units, exceeding economists' expectations and making the largest monthly gain in a year, according to NAR. The rebound in home sales comes from fluctuating mortgage rates and elevated prices, indicating there is plenty of buyer demand heading into the spring selling season. I just wanted to highlight that, indicating there's plenty of buyer demand heading into the spring selling season. I think that goes to the fence we were talking about. There's tons of buyers that are on the fence, and the uptick in prices and activity that we're seeing is because I think when rates went up, everybody got on the fence because they were scared and it was fear driven, and they've been up there for so long. Now that their fear levels have dropped, and they're like, hey, it is what it is.
Yeah.
My family can only live in grandma's basement for so long. It's time to get off the fence. And that's what we're seeing. Buyers are still out there. Should they drop rates, we're going to see it's not going to look pretty.
Floodgates are going to open.
Yeah. So it's almost better how it's happening now, where it's just easing into it, right?
Slow trickle.
And then just wrapping this up at the end, it says buyer demand remains robust, and the limited supply of inventory helped push the median existing home sales prices up 5.7% year over year, the 8th consecutive month of annual price increases. 8th consecutive month. It's crazy.
I want to, going off of that, I want to talk to our sellers out there. Even though all this stuff is happening, the one thing they don't really hit on that is it does take time. Once you get on market, don't expect to just fly.
Oh yeah.
It takes time to get the best possible outcome. So be patient. Don't get panicky when you're 30 days in, and as these buyers are starting to jump off, and that spring season we talked about heating up, buyers will start to jump off. They will get to their breaking point where they need something and want something. If you have the ability to be patient, be patient.
We just said 60 days on average.
Yep. 60. Well, in the Valley, 114.
Right.
Half a year almost.
So
should we cover it? Because I don't want to take too long.
I think this is just kind of going over. We're just taking a snippet of our Q1 on this March. Yeah. I don't think.
So maybe let's hit days on market, and then median and average sales price, and then percentage of list price received, because those I think are the most important. So this is just comparing March to March of last year to March of this year. So our days on market, we were 60 last year. We're 61 this year. So it went up 1.7%, fairly stagnant. And then
the median sales price, we kind of already hit in Utah. We've gone up about 4.3%, or excuse me, for March to March.
2.9.
2.9, sorry. March to March, 2.9. I was looking at Q1. Sorry.
Yeah.
2.9. So 494 to, no, we went down.
No, we went up.
Got to cut that out. Sorry.
No, we left it in last time. I messed the same thing up last time. It's weird how they have it ordered, isn't it?
Yeah,
the first column is this year. The next column is last year. So you got to read backwards, basically, is what you should do.
So median sales price, March 2024, 494,000. 2023, 480,000, showing an increase of 2.9%.
There you go.
Yeah.
There you go. Where do you want to go next?
Average
sales price?
Yeah.
Okay. So last year, average sales price was 601. This year, this March, it's 624. So an increase of basically 4%.
Cool. And then percentage of original list price received. I think we can end with this one. So last year we were 96% of list price. So this is what the sellers get if they list for $100,000. They're getting $96,000, right? And that went up to 97.4%. So sellers are getting more for their houses. Buyers are able to negotiate less. All signs of a stable, stronger market.
So buyers losing slightly less power.
Yeah.
This March compared to last March.
Yeah, and I think that goes back to the days on market. If you are not in a situation where you have to get out and you have the ability to be patient, the buyers are trickling off the fence. So
right.
Yeah.
Be patient.
Yeah.
Well, this has been a very thorough market update for Q1 for Northern Utah. What do you want the listeners to know Any takeaways or things that you want them to know? The sky is falling.
The sky's falling.
My biggest thing is buyers. If you are not currently in a home, if you're new for first time, or you sold and fell into the trap of renting and now you can't, get back into a house. It's
Yeah.
going to sting. It's going to hurt. It's going to suck. Just like if you're a first time home buyer, it's going to suck. It's going to be a culture shock. Get into something.
Yeah.
Yeah.
Be responsible about it, but get into something, because the old adage, it's not timing the market, it's time in the market.
I
Yeah.
was just going to say that.
You know, that's what
Yeah.
the biggest thing for buyers, whether you're first time or basically buyers that aren't currently in a house, right?
Yep.
Get into something.
Yeah.
Start paying your debt off. Start building your equity.
That would be my same message, but the reason behind it, I guess, for me, is because when rates do finally drop, like prices, economics would say prices would shoot up, right? So if you guys are trying to get in-house, get into it right now at this price point, not at whatever prices are when rates are 5%, 6%, because chances are that price is going to be pretty dang high.
And he has a degree.
I don't know what that really does, but it's not. Gosh, it's
Not
just
wrong.
I don't want people paying more than they have to. Refinance later, get a better rate later, but don't pay more than you have to just because you're scared of an interest rate. Make sure you
Well,
can afford the rate. You got to be
yeah.
able to afford it for now.
Yeah. Well, and our whole goal with doing these podcasts and stuff is to educate you guys so that you can like walk into the market and be like,
Yeah,
have an idea what's going on and have more
Yeah.
confidence in what you need to do. But my takeaway is life's short. Like you can only sit on the fence for so long. You can't keep your family homeless forever. You can't pay rent forever. Like rent's 100% interest, right? And every one of the properties I bought was scary and intimidating at first.
Yep.
Like even the first one I bought, right when I got back from my mission, it was like 2012 or 13. And it was 189,000. And I'm like, oh my god,
am I overpaying for this?
And my dad's like, yeah, my first house was 15,000 up in Smithfield, and I was in Logan, and I'm like, oh, it's overpriced. You know,
Yeah.
if had I
Yeah.
only known,
Can I afford this?
yeah, can I afford this? And I honestly, I really couldn't really afford it. I didn't have a great job, and it was seller finance, but we got it figured out. I remember the payment was $933 a month, and I moved into the basement and rented the upstairs out for $900 a month, and then I was hooked. I was like, "Holy cow, this is
yeah.
amazing!" Like I'm living here for $33 a month.
Yeah.
Like I was stoked, and then it just got better. Like I kept that house for a handful of years, and then sold it and made 50 grand, and then bought a fourplex. So if you're not in the market, like these guys have said, it's not going to get easier, right?
Yeah.
You just got to get smarter and figure out how to make it work, and then it's time in the market. The longer you're in the market, it just makes you look like a genius, but we're not geniuses. We just got in at the right time, right? Any one of the properties we bought, it was scary, nerve-wracking, but looking back, you're like, oh, that was
Yeah.
like the best. Like
No,
it was a no-brainer,
the
right?
time makes it a no-brainer.
Yeah,
You talk to you the day after you bought it, you didn't know if you just made the worst
Yeah.
decision
Yeah.
of your life.
hmm
But now you have people, us,
And-
family,
yeah.
that have done it.
And
Yeah.
every one of those properties, at least for me, I've had someone, if not multiple people, say, "Is that a good idea? Should you be doing that?" Like
Yeah.
second guessing me.
right. So
Yeah.
if you're a seller right now, I think just realize too, market's still a seller's market. It's strong. It just takes a little bit more time. It's not like selling a car. You're gonna have to be patient. And if you want to get the highest money out of it, you're gonna have to be patient, right?
And that's normal.
And that's okay.
That's the biggest
Yeah.
thing.
Yeah.
Like these days, like this is normal.
Mhm. This is healthy.
Healthy. It
Yeah.
takes time. People
Yeah.
got to figure it out. They got to work their money. Like you've got to give them time to buy it. So
Right.
don't get in a rush. Another thing I do want to touch back to buyers again, and this goes for all buyers, investors, all of it. It's not the same. It's not the same. And we've fallen into this pit. There's rules and there's podcasts you listen to and how you make sure it's a good investment. And like one thing I have to say is get cash heavy. Okay.
Yeah.
It's easier said than done. But a lot of like nephews and nieces and stuff that will talk to me and like, well, what do we got to do to get a rental? Because they're grinding the gears and they want to do stuff. And all I can say is and I don't want to sound like Dave Ramsey,
Oh,
but work more, save that money,
Yeah.
sacrifice now. Like if that's the game you're wanting to play and you want to dispatch that money, it's not as easy as it was. It
Yeah.
really isn't.
Right.
But it's still a great way to secure your future. You just have to work harder. You know, single income families are almost not possible anymore. Like you might have to bite bullets. You might have to make some sacrifices now so you can enjoy your life later.
Well, work harder and smarter, right? Like
Yeah.
buy a house with a rental that you can rent out, and then there goes half your mortgage
Mhm.
payment. Like it's still, you can still house hack your way through. But yeah, you do need to have like good savings. We're not saying jump into something that you can't afford. Like I'll have to do an episode on this. We bought a nightly rental in Bear Lake, and it's terrible. And that's one that I'm like, yeah, I can hang on to that for a long time. And eventually it would like maybe make sense, but I'm not willing to pay the $3,000
Yeah.
a month
bleed.
to
Yeah.
hold it. And so like that's been a lesson learned for me. Just vet the deals, make sure it like you can afford it and you'll be okay. Right.
Yeah.
Even with Bear Lake, it's like we're not in a terrible spot. Like it's not ideal, but we will still be okay. Right.
Right.
And so you never want to do something that's going to take you under, like, and you don't want to sacrifice, you don't want to be house poor so that like you can never leave for a family trip on the weekend because you have to work overtime every weekend in order to qualify for the house. So we want you to be smart and savvy, but just realize it can be done. And
And I think a lot of that comes back to when we talk sacrifice. It's more sacrifice some comforts in life.
Yeah.
Like
Trade in the 40 grand truck for the 20 grand truck.
yeah.
all right, Dave.
No,
but
I actually
just-
literally heard him say that.
Exactly.
actually.
or like Peyton said, get a renter. Yeah, nobody wants to rent out their basement or a loft
Yeah.
or something
Yeah.
like that. But get a renter and you sacrifice that comfort for the eons ahead.
yeah,
It will put you.
yeah,
So, like I said, don't be stupid, but don't be afraid to, okay,
Yeah.
this is what we have to do. And one thing I'll say for young couples and couples in general, get on the same page as your spouse, girlfriend, friend, business partner, husband, wife, whatever. Get on the same page because that's what makes getting into real estate and investing and making your future secure is having a partner that supports you and you support them in all decisions, in the sacrifice,
right.
in the time, in the work.
Yeah.
Because if you don't have that, it's really, really hard to do.
Well, and it's setting goals too. Like Austin said this morning, he's like, I have a goal in, a year or two to buy this house. And in order to do that, I have to hit these goals. And so I can qualify for that house,
Mhm.
Like it's not, none of us just woke up and we're like, oh, we got rentals. Like,
Yeah,
right,
it was like, it all started with a thought process and the goal that we had years before we even got them.
Right.
Right. So it takes time.
Yep.
Got to plant
Love
the
it.
seeds now though. So
Get your mindset, get your money, and
reach out to us if you guys have any questions. We're here to help, and hopefully you found this helpful, educational, and insightful. So till next time.